Hello and welcome to Moneycontrol. Well, I'm here at a very beautiful university campus in Pune, the Flame University, which is founded by one of the legends of the Lal Street, Nimish Shah. And here I'm joined by another legendary Indian investor, Ramesh Damani. Is not a stranger. All of you know him very well. Thank you so much, Rameshji, for talking to me today.
Mahalakshmi, thank you. It's always a pleasure to be on with you on your show, and thank you for the very kind introduction. I'm not sure it's deserved, but thank you anyway.
Oh, absolutely. No question about it. Rameshji, first thing is we are attending this 5-day workshop for, that Dinesh Bhai and everybody in INAM has created. It's beautiful to see, how vibrant this whole thing is. So many legends of the Lal Street, big fund managers right here speaking, sessions going till 12 o'clock at night. What brings you here?
Yeah, thanks, Mahalakshmi. The intellectual village we call Graham Dodd Buffettsville is now centered in America, in Omaha, where Buffett lives, So all value investors ultimately flock there at one time or the other of the year or pay obeisance to what Buffett has taught us about value investing. I'm of the firm belief that what Durgesh Bhai and Nimish Bhai have done with Flame and made the intellectual center of value investing in India at Flame University. The course they've been running now for almost a decade plus is an extraordinary course where the best in the business come and interact with students, professionals, young people to try and explain to them how it has been and how it can be. So it's been an extraordinary influence on my life. I've been very privileged to come and speak not only about values and valuations, but also learn about values from the likes of Nimesh Bhai, Durgesh Bhai that you mentioned.
Oh, absolutely. And you come here every year?
It's been pretty regular. Other than the COVID years, I've been here since inception, yes.
Sure. Now, back to markets. So the first thing is that, markets have a mind of their own and they're super unpredictable. And I think the most recent demonstration of that was everybody was thinking that if we were to have an adverse outcome to the election, the markets would tank. If we had a positive outcome, the market may not rise. And both of them were turned upside down. Yeah. There was an adverse outcome, but the market, except for that one day on Tuesday, it is back to newer highs.
In fact, all-time highs, as you said.
Yes.
You're right. Markets humble us. I wish I could say I was Yoda-like, Buddha-like. I was not rattled by what happened on June 4th, but I was also rattled. I also lightened up some of my positions. So it has been an extraordinarily difficult market to navigate. But a few things are becoming more and more clear, Mahalakshmi. The first is that we're in a structural bull market in India. And once a bull market starts, there can be wars, change of governments, change in so many other things in the global sphere. But the bull market marches on. And this has taught us that despite our skepticism at how the markets will handle a government change, the market just brushed aside one trading session and it moved to all-time highs. So I think it also taught us the power of a bull market that's happening. And I always quote this great example of the Japanese bull market that started when Japan was a third world country hosting the Tokyo Olympics. The Japanese companies, the Toyotas, Datsuns, Hondas, Sonys, were unknown in the world. But by the time the bull market ended, Japan had gone from 1,000 to 40,000. And all these Japanese companies have become global names.
Right.
We could perhaps be in a similar trajectory in India. This is a long-term bull market is unfolding. Of course, we tend to get a bit more skeptical when the market goes up. We think it'll go down.
Right.
But I think when we were young, we used to play this game called passing the pillow, in which case you don't want to hold the pillow. You want to pass it on before the music stops. Well, in India, we might be doing the reverse. The person winning the race will be the one holding the pillow at the end of the race.
Right. So one event is over. The next one is coming up next month. How important is it, the upcoming budget?
I've been through lots of budgets in India, and to me, I think if we could survive so easily the change in the regime of government from uni-party government to coalition government, I'm not too worried about the budget. I think all governments now look at the Sensex and look at the Nifty, look at the markets to see how the reaction. So there are progressive policies. I've been watching them from 90, and no government has given them what we call so-called a bad budget.
Right.
You come and see everyone seems to have given a good market-friendly budget. I see no reason to change. The two big fears in the market prior to the budget or prior to the election also was one, would the wealth tax be introduced?
Yeah.
That was a palpable fear. The Prime Minister's ruled that out categorically. So the market breathed a huge sigh of relief because of that. The second question is, for the markets, will they change their long-term, short-term capital gains tax? And my answer is very simple. If it ain't broke, why fix it? The government collections for long-term, short-term SCP are at record levels.
Right.
The market is buoyant because the taxes are efficient, low, and well-intentioned.
Right.
I don't think the markets or the government will change that in a hurry, because why do you want to kill the golden goose that lays the egg?
Right.
So I'm pretty sanguine with the budget. Of course, they talk about Viksit Bharat, how India will look in 2047.
Yeah.
Look at other long-range things in infrastructure spending, other social policy agendas. I think that the market will evaluate. But broadly, I think the undertone remains bullish.
How about STT? Because day before yesterday, a lot of market veterans met the finance minister, and there is talk about, hiking STT, at least for a certain segment of the market. Lots of people, everyone, the FM, the SEBI chairman, the RBI governor, everybody has been talking about this F&O volume going up and how that's a bad thing. It's a social problem. The SEBI chairman has said there is no systemic risk. Do you see that coming, and will that be disruptive in the short term for the market?
Question, but I first must congratulate the exchanges and secure board. The kind of volumes you do almost seamlessly. Whether it was on budget day or whether it was election day or whether it was any other day, you do almost record-breaking volume and seamless transactions to settle. You remember you and me walking down the last in the 90s, and there's always a fear of default or brokers going bust. It is all being taken care of.
Correct.
Extraordinary systems, extraordinary margining systems, extraordinary robust. Congratulations to you on that. Is the F&O and the option volume, because of differential SC treatment, a problem? It could potentially become a problem, especially in a bull market when everyone makes money, no one complains. In a prolonged bear market, when people will actually lose money, I think they may complain. So it's better to nip the problem in the budget, maybe through differential, higher SCT. I think options are now at a favored rate of tax. So maybe they increase the option rate. But basically, I'm not in favor of intervening in the markets, because, if you take liquidity out of the option market, it will affect the cash market, which could then affect the index. So, these are very hard things to do. I think the regulator has shown proper judgment and light touch. I hope they continue to do that. Taking into account if there's some reckless speculation going on, there are ways to bring that under control.
Like what?
You raise the margin requirements, for example, raise the SCP, make it job-owned a little bit. I think they partly send a message out to everyone that 90% of people lose money in F&O. That message is coming. So the ways you can psychologically influence people, an outright banning is not something that I would favor.
Correct. Now, stepping away from, the immediate things and budget and so on, I want to talk to you a little bit about technology and how disruptive it can be, because you started off in the US as an engineer, and then you came here, became an investor. You still invest in US tech. Last time we spoke, you said you were bullish on US tech. AI is a big buzzword, but when I think of AI, the first thing that occurs to me is job cuts. And in India, this grand growth story, the demographic dividend that we talk about, all of it really hinges on jobs growth. So how do you see AI, the impact of AI on India and India's growth?
Mahalakshmi, sometimes I feel this is above my pay grade. This question is so profound. We just was hearing at Flame itself, before our session, we heard Rajiv Jain talk about how pervasive, disruptive, and fast AI is coming, and how it will impact jobs, as you correctly said. And I think it will usually impact many categories of jobs: legal firms, analyst firms,
media, journalists.
Media.
I think the first thing that is getting affected.
So it will get affected. As you further pointed out, that you don't want your children to be educated in a programming language, but how to prompt in English language, that become better in terms of liberal arts. So I don't think we are fully grappled with, but it's a train coming down at full speed towards us. I think sooner rather than later, you'll have to deal with it and how to build up portfolios. So it might be looking more towards building it towards companies that make the digital infrastructure, maintain the digital infrastructure in India, a real estate business, which will continue to prosper irrespective of what happens, because people want a place to live, something to eat. So maybe we'll have to reorient our portfolios away from...
which are away from the AI disruption.
Which is not easy to handle. But to be honest, so far what I'm doing is just trying to ponder it, trying to understand it. I've moved my portfolio sharply towards what I think the benefits are or the losers are from AI. I haven't been able to do that because I've not been able to figure out who the winners and the losers are.
Right.
But I think it is the time has come for us to, over the next 6 months maybe, to ponder that question more. But clearly the winners will be the people who handle the digital infrastructure and the businesses that cannot get disrupted by AI, like housing, tourism, and the like.
Fair enough. Fair enough. How about Indian IT?
It's generally been a poor space to be in. They've been treated more like defensive stocks, the offensive stuff. But I think, given the fact the importance of AI and the data is going to remain in India, and a lot of these data will have to be read, understood, and acted upon, I think you need a good business to go with that.
These can sustain.
I think so.
Okay. Would you put your money there?
I have long-term money always in tech. It has not performed as well as I thought it would. But there are portions of it that are doing well. The big tech service companies haven't done as well as you think.
Right.
But that's part of investing. I mean, you can't always get the hand you dealt with. Sometimes you need patience for investing mature. These are good businesses, run by capable people and playing into India's strength here. So I think maybe I'm still hopeful the time will become better in the next few years.
Okay, another question is related to US tech. You look at, maybe I'm jumping the gun here, but if you look at US tech, Google trades at 27 times, Apple trades at 32 times, Nvidia trades at 70 times trailing earnings. You can't find a single company in India which is, which has a good brand or a moat, which is anything below 40, 50 times PE. So how do you reconcile the...
I mean, Infosys will be trading at less than that.
Yeah, IT services may be an exception. Even pharma, generic pharma may be one pocket, but that apart, how do you see, how do you even reconcile to this?
See, bull markets, have some strengths in their stomach, which they reveal only later on. Like I said, the Japanese market went up 40x in yen terms. And in dollar terms, we went up 100x almost for a period of 25 years. So you don't know what a bull market tells us. Life has to be lived forward but understood backwards. Similarly, the bull market, we have to kind of watch it and then try and understand what happened. So I think we'll have the answers only later on. But right now, if you're in a high-quality business in India, earning a good return on capital, good return on equity, you need to hold on just because the stock. I've always said the way to get rich in the bull market is to make 20x your money, not 20% on your money.
Right.
And the way to make 20x is to hold on to that good business over time.
Right.
The market decides with wisdom what P is going to be given to a stock. And I don't think we are in a position to understand what the P is given. Right. As long as the business is good, run by good people, having sustainable cash flows or a path to steal your cash flows, I would stick on to that business. What people forget about India is its sheer size. Economics of 140 crore people moving to a per capita income of $3,000, $3,500. Genomic terms of influence, in terms of size of markets that can happen. Everything will be a J-stick curve. Whether it will be disposable machinery, it will be vacations, it will be healthcare, it will be education, whatever. So I think the bull market is beginning to factor some of the size that can happen when people execute properly. It could be as mundane business as grocery shopping. It could be in the technology business, or it could be a provider of digital infrastructure. So I think the bull market story gets unfolded over time. But just because the P is mostly higher is not a reason to sell. We want to keep well-run businesses, and the P will be decided by the market, not by us.
Fair enough. But if you were an investor today, I mean, in the sense that if you're entering markets today, what would be your advice? Because Charlie Munger says, the money is not, big money is not made in buying or selling, but in the waiting. And people who have waited, with these valuations post-COVID has obviously not made money.
My son was fond of telling me this. He says that you can't win if you don't play the game. And I think the game in India, once you realize that, whether it's fixed deposits or whether it's intercorporate deposits or gold or real estate, you're probably not going to beat inflation. So to beat inflation, you need to come to the market. As India financializes, the markets will do genomically well.
Hmm.
And I think part of playing the game, giving yourself a chance to win, is to remain invested in high quality businesses in India. Over long term, Sensex is compounded at 13-14%.
Yeah.
Add a couple of points of dividend, inflation is 6-7%. Gold's 200-year CAGR is about 3%.
Right.
So, clearly you want to remain in a riskier asset class, but which is better long-term fundamentals.
Right.
So, from 2009 to 2024, period of almost 15 years, Sensex has gone from 70,000 to 75,000, which is not great in terms of CAGR. It's only about 10-11% CAGR. But just look at from where it started and where it's gone.
Yeah.
And the index has gone up 7x. Your individual companies have gone up 15x, 20x. So I think history teaches us to remain invested and, be invested in high quality businesses.
And if you were to start out in the market today, where would you nibble?
Well, the first thing I would encourage people is to get invested in a business in India. A lot of people ask me this question. Oh, well, you're lucky when the index was a few thousand points. Today it's 75,000. We're not so lucky. But the index can go to 150,000. You say the same thing about 75,000. The other question I said in another interview, Mahalakshmi, that you might remember, said, when is the best time to invest in India?
Yeah.
And I said the best time to invest in India was 1991. And Dr. Manmohan Singh gave this path-breaking liberalization budget in India. The second best time to invest in India is now. You have to invest. If you want to see what happens in the next 5 years, you have to invest. Now, to answer the more specific question of where I would invest, it's a two-part answer. The first part is you don't know what you're doing. If you don't know market, but you know you want to be in market, you don't understand stocks, buy an index fund. So that will track the index. The index doubles every 4 or 5 years. The money will double every 4 or 5 years. And that's good enough. If you are more prone to buying direct equity, understand direct equity, then a plethora of choices will. I told you digital infrastructure, that will do well. Yeah, I've been buying a lot of pharma companies because I find them fairly cheap in buying them. We made a bet a few years ago, of course, on the public sector stocks. They are now the leaders of this bull market, and I think they will continue to lead. Now, there might be some rotation out of some favored sector within there to other sectors, so that you have to balance out there. But my broad understanding, and that's subject to change, of course, is that you're better off remaining invested in high-quality businesses rather than trying to be too cute and do gin and rummy and pack and say, oh, market's high and sell today, buy back when it's 5% cheaper. I think it's generally a foolhardy trade.
Right. So in pharma, any particular segment of pharma that you're bullish on?
Yeah, surprisingly, what the 2-3 areas that I'm zeroing in on, of course, I'm finding some pharma shares that are just cheap. But the other pharma shares, for example, that are making a run for the biggest blockbuster drug in the world right now, which is semaglutide or the Ozempic.
Yeah.
And a lot of Indian companies are now going to make compounds or generic equivalents of that, or when it gets off patent in 2029, make the generic equivalent of Ozempic itself.
Right.
Then there's another company that is making the pens with which you take the Ozempic injection.
Right.
That'll be a huge market.
Right.
That's one segment. There are a couple of companies that are doing molecular research at the basic level. One of them is even very close to very promising antibiotic drug. So that looks promising to me. But across the board, I'm not someone who's generally been bullish or well invested in pharma. But if I see what I've done over the last 3 years, I put a lot of increasing bets on a variety of companies in pharma. From makers of semaglutide, antibiotics, and just generally, there's a company that tries to make Botox treatments in India, which will looks again like good value. So I'm finding good value there, Mahalakshmi.
If you remember in the early part of 2000, after the IT thing, I think one of the big bets a lot of people were saying is, US generics will perhaps have the same kind of impact. It could be as big as Indian IT services. It didn't really play out. And then you had these last 10 years because of US generic pricing pressure, vendor consolidation in US, the sector didn't perform. Is there something fundamentally changed that can make this, equation change for the next few years? Because this US generic pricing pressure, it's been persistent. It's just,
I'm not that much an expert, but there have been companies within my portfolio that make niche generic products And whenever they get successful, they get a huge bonanza coming in there, as opposed to making generic without any intellectual property out there. So maybe that
be selective with
maybe that company that has some intellectual property and going out of a niche generic market, as opposed to something that everyone can make and you just buy the API and make it. I think maybe that won't do well. But there is enough diversity in Indian pharma basket that you can be a bit more picky and choose.
Right. Any pockets, Ramesh, you see where stocks can go 10x? I know this 10x is just a figure, but what I'm seeing is, when you talked about United Breweries, when you picked up the share, or Bharat Electronics, stocks, you could see, penetration level for beer and spirits was very low in India. You said that it was not reflected in financials when you picked it up, but you knew that, it'll get sorted out because the power of the brand, the penetration will see that growth play out. Do you see any opportunities like that, which are so clear to you that they have a 10-year growth story that you can bet on? And therefore, you don't mind paying an extra price if you...
I'll tell you how to do this, Mahalakshmi. For example, we've had a great run in the last 5 years in defense stocks in India. And we're lucky to buy all the defense stocks. And people ask me why I was buying there. And here's the logic. India spends about $50-60 billion a year in defense expenditure. And, India is the last coastline that has to be defended. It has neighbors on the east, neighbors on the west, who are somewhat, factitious to us about the border. And talking about Pakistan and China. So, there's always a need for defense spending in India.
Right.
And yet the defense that enlisted that time, and I'm talking about Hindustan Aeronautics, Bharat Electronics, GRZ, all the defense companies, not recommending anyone, I'm just telling you. Available for a few $1 billion. So you're getting it at 0.05 times sales. And they had 5 years visibility based on the order book and a 5% yield. So that's how great opportunities are made in life. When you try and find things that people are ignoring, available for a fraction of the value. I think one sector that I'm, to come back to more to the present now, that may prevent opportunities because we're putting so much money and effort into it, is the semiconductor sector. So a lot of people, for example, are doing in semiconductors, there's a whole chain. The part of manufacturing it is not going to happen in India. I think we're trying it, but it's not going to be any meaningful amount. But the design and the fab stage will throw up companies in because they have the engineering talent pool to do that. So I think that will, see a great opportunity. A lot of Indians put what they call, a lot of global companies put the global capability centers in India. Some of them are in the listed space. That will tend to do well because India is going to become a service economy, not so much a manufacturing economy. So that will do well. I think if you buy some, see what happened with the PSU is very instructive, Mahalakshmi. The debate for 20 years has always been that, oh yes, they represent value, but we're not buying them until the government privatizes them. And then value will be unlocked by a private indicator. But in the last 5 years, the movement suggests that the debate is over. The government has been a good steward of capital. They have assured good values out there. I mean, the average defense stock is up 15x, the average railway stock is up 10x. So government has known that it can deliver value, leakage would stop. And you really have to thank the efforts of DIPAM and PMO's office to unlock the value, motherload of value unlocked in them. So I think that the first flush of gains have happened there in the defense and railway. But other stocks in the construction company and, people doing iterations of the coverage of train systems or for, some other places. So I think opportunity will be there also. So I think the opportunities are still there. But my first thing to most of your viewers is that to win in this game, you have to invest and you have to put some money on the table. So I would suggest that if you're a young person in India, you want to beat inflation and you want to compound your money at some reasonable rate, you have no other choice but to come into equities. And it's not high, in my opinion, to come into equities.
Sure. You made an interesting point. You said India is going to be a service economy, not a manufacturing economy. And that's against the narrative that is being spoken about today. The PLI-led story, the China Plus Fund story, all of that is centered around manufacturing.
I don't know, maybe it will be manufacturing, but, so far the evidence doesn't suggest that, India can have this space to be the workshop of the world like China is.
Right.
I think every country has its own strength, and while we can try and build this manufacturing base,
You're more bullish on
my
the service.
feeling is that we'll be more successful in a service economy or in a domestic economy as opposed to an export-oriented economy.
Right. You spoke about PSUs. So any pockets in PSUs where you think stocks have not completely run their course? There is still a long head.
Sure. I think in the construction business and in the gas business, what has happened is that there's some suggestion, in fact, in the next few days you might see it, that gas will come into GST. It's a big boom, lead to a volume and profitability growth. A lot of the gas companies, many of them in the public sector stock.
Yeah.
So that will be good. Government is on a binge almost on construction, whether it's housing, infrastructure, whatever. So I think those companies that are exposed to that will do well. I think personally, I own a lot of the defense and railway PSUs, but they've had an extraordinary run. So I would be comfortable rotating some money out into some other pockets of the PSU. But I do believe that by the time this bull market is done, people will understand the power of the PSU and the fact that they have been leading this bull market from 80,000 to 75,000 and higher, I think.
Yeah. So you are saying in railways and defense, there are excesses now?
I wouldn't say excesses, but their valuations are straight. I mean, they're no longer bargains. You see, Mahalakshmi will always look for stocks that may not go up, but we try and find 3x, 5x, 10x type of moves in the stock. It's hard for me to imagine from some of these lofty valuations that you give me 5x, 10x your money. Would I hold on the stock? Yes, I would hold on to some of them,
Right.
Would I book profits so I can invest in some of the cheaper PSU stocks? Yes, I've done that.
Sure. Are there any, you're saying in construction, you see a long runway of growth in PSUs, and that's not predicated on private sector coming in. That's not a disinvestment story.
I think the whole debate being privatization, the private sector would unlock value, and the minute you got a private name in there, the value would be unlocked there. But being a government company has its advantages. Sometimes you just get bids by nomination. Sometimes they prefer to give PSUs with no allegations of corruption. Sometimes they just want to build the public sector stock up. Okay, so I think a lot of them have shown that they still, have meaningful market shares. And it's not going to be easy for a private company to take over the market shares for these companies. So I think whether it's in construction, is a very competitive field. So I think a lot of things that need to be constructed will more force go to a government company as opposed to, a private company. Because that just removes...
But that is only in a closed structure, right, Ramesh? The moment, you see across industries, the moment you have rock-solid competition from private, public sector has always yielded ground. Is that not true?
I'm not sure. There is, of course, instances of what you say, but this is a private company doing very badly and taking you to zero.
Correct.
There's a lot of nonsense going around in the stock market there.
Correct.
We don't buy PSUs because, hey, there's a race to zero, or there's, what they call, reverse migration going on. And I think the last 4 years have proved them wrong out there.
Correct.
That given a free hand and given a watchdog, they can compete and they can deliver products at a much cheaper rate. Than, people were very apprehensive of the defense stocks in India. But over the 4 years, it needs superior returns. And you look at the corruption or the, I scratch my back, you scratch my back that goes on in Western companies. We charge you $2,000 for a toilet seat or, multi-million-dollar thing. And here these guys deliver so much value at such even DRDO is an excellent organization delivering such great value across the stream, missiles, ammunition, tanks, warships, whatever, It's a great national asset to have. And they give the research practically free to all the government PSUs. So if you're a part of the PSU, you get access to all the technology and all that information, even at a modest rate. So you pay some royalty, but at a very modest rate. So I see no issue with that. If they privatize, they will not have access to that. And plus, they would need to invest huge amounts before they show a profit, which they may not be able to do. I mean, they might be saying, we'll take it slower time. In the meantime, our security threat doesn't go up. We still need to secure our borders, make sure that we are protected. So there's a role for all these companies to play here.
Right. The market is even bullish on oil PSUs. Is there a play there?
Well, I prefer, in my opinion, the gas sector PSU because gas is the fuel of the future.
Yeah.
The oil PSUs are pretty cheap in terms of return on capital, cash flows, all that. But it's unclear to me what will happen over the next 5-10 years with the coming of electrification. I think they'll do well, but and I have bets on them.
Okay.
But if you ask me, I'm more bullish on the gas. On the people are producers and distributors and suppliers of gas.
Sure, understood. Do you think this government could take up disinvestment in this term? Because in the last term, really not much happened. But is that completely shelved?
They may, but I doubt it. And, frankly, as a long time watcher of these stocks, I almost don't care anymore. I would be very passionate about privatizing previously because that was the way or the path to unlock value, like I mentioned.
Right.
But I think increasingly...
If it's happening despite...
just look at the valuation. Anyone who has been investing in PSU shares has made 10x his money. Right. And it happened why? Because governments have given them freedom. Governments have cut down in this telephone banking and corruption that is going on. I think they've been the best performing sector in the market.
Correct.
So, I'm happy as long as the government is a good steward of capital with respect for minority shareholders, I'm okay with it. If it happens, I'm not going to be upset about it, but I think we're fine. And I think there's no consensus in India. Unfortunately, that requires a political consensus to happen.
Right.
You remember the first BJP government with Bajpayee who was there. They wanted to move on privatization. George Fernandez stopped them. Privatization hanging abroad. So with the coalition government, seems unlikely.
Right. How about banks? Today, the differential between public sector banks and private sector banks is at a historic low. In fact, one could not have imagined HDFC Bank at 2 times book, which is what it is, or a Kotak Bank at 2.2 times book. Is that looking like a value? Are private sector banks looking like a value play right now?
I think they are. If you ask me, particularly...
But will it get unlocked?
I think they will. Particularly if you ask me in banking, I would be leaning... See, I think there was a mismatch in valuation between public sector banks' value and its potential. That got corrected in this bull market, at least some degree. But would I bet rather on private sector banks or public sector bank at this point? I probably would favor private sector banks.
Private sector banks. Sure. One thing that is etched in investor psychology today is this buy on dip. At least post-pandemic, we've not even seen a 10% correction thus far, right? So tell me pockets where you think, investors should exercise this, continue to do this buy on dip, and pockets that you think are ripe for sell on peaks.
What I try to do is, you make a lot of mistakes, Mahalakshmi, at the individual portfolio level. You will sell too early, buy too late, do a bad investment. That tends to happen over time. And it really can't be controlled because, you in the market every day, you will tend to do these mistakes. So how do you evaluate whether your success or the strategy is working correctly or not for you? And the way I tell all my people who come to me is that given what's going on in the background and the kind of, general bullishness we have, over the last 3 years, over 3 years' time, you can double your money in the stock market. And broadly, I've seen that from the 90s onwards. Like I mentioned to you earlier, the market itself moves up 14-15%. You have a couple of points of dividend. But if you do it 23-24%, you're doubling your money every 3 years.
Right.
And if you do that over a career of 30 years, you'll have 10 doubles. Anything that doubles 10 times moves up 1,000x.
Right.
And you start with 1 crore, you're going to end up with 1,000 crore. And to me, that's the mantra that I teach everyone. I said, you make a lot of mistakes in life, you try different strategies in life. Some will do through futures, some will do options, some will do arbitrage, some will do dividend deals, some will do investing. Fine, do whatever you work. But at the end of 3 years, ask yourself, have I doubled my money or not? Or have I a path to double the money? And if you've done that, you follow the right strategy. Generally, as Buffett founder and Graham Doddswell, the people who provide long-term returns that are superior are the long-term investors. The people who buy and hold generally do much better than the variety of other strategies that is suggested to you. So here's a test for yourself. You think your strategy is better? By all means follow it. If you're not able to double your money, then maybe you need to change your sales and cut your rope a little bit.
Right.
So we make tons of mistakes in the stock market, but it all comes down when I evaluate my portfolio performance. Having you done my money in 3 years is not an easy ask. But even if you double it every 4 years or 5 years, you're still way ahead in the game. So I would urge people to look at the portfolio level.
Hmm.
Into your stocks, I could tell you something overvalued and get extremely more overvalued tomorrow.
Right.
Which often happens to me. I mean, I told a lot of my clients to sell, say, stock X, and the stock X, which I sold, also doubled after that. So that happens all the time. But I mean, that's what it takes. So the answer to the question is to try and work at a portfolio level and see that your portfolio should broadly double every 3 years. The kind of bull market we're having and the kind of run that India is having, a lot of people have been able to achieve that.
Sure. I can't not ask you this question. What is the last book you read and what are you reading now?
Some have been fascinated by Indian politics recently. So I've been reading a book.
Because of the elections?
Because of the election.
It's in the air.
I need to fill up the gap. So there are 2-3 books that I recently enjoyed reading. I, of course, continue to read financial books, but just to give more perspective. There's a book by Nija Chaudhary called How Prime Ministers Decide. How they decided all the way from the Ark up to Narendra Modi. I found that quite fascinating. It's a very nice tone of Babri Masjid and liberalization and all those different factors that prime ministers took into account. Then we have a coalition government, and before that, Modi government, we also had a coalition government.
Yeah.
The person in charge of the coalition government that time for Congress used to be a gentleman from Kashmir, Ghulam Nabi Azad.
Right.
He was the parliamentary minister in parliament in charge of putting all together. And they ran a successful coalition government, including some breathtaking reforms in the 90s. He has an autobiography called Azad, which I enjoyed reading. And there's one that's recently come out which talks about how and who have become Chief Minister of Uttar Pradesh. The electoral landscape in India, as you know, runs through Uttar Pradesh. You control Allahabad and 80 states.
Right.
You have a great voting power there.
Right.
So I'm just going to begin to read that book. So those are some of the books that I really enjoyed reading over the last 6 months or so.
Right. Did any of it have any direct takeaway or even subtle takeaways for the markets?
I think the point, Mahalakshmi, is that what we've learned in the last from 90 onwards in India is that governments come and go. And bull markets happen and bear markets happen and global financial crisis happens and, COVID happens. Markets are fairly resilient,
Right.
And if you buy a good quality business and you hold on to that good quality business, that is better than almost any FD you do, or gold investment you do, or real estate you do. You're a growing, living organism that even gives you the yield in order to support you. So my lesson, what I've learned over 30 years, is buy high quality businesses, don't go for bad businesses, go for good businesses, and remain invested in them, and learn to estimate the difference between risk and volatility. Risk for your viewers is you permanently lose capital.
Right.
You can't afford that. Nobody can afford that. Volatility is what happened on June 4th.
Right.
Even I was rattled by it, but that's what happens. Market goes down, market goes back up, and that happens constantly over a period of time.
Right.
So volatility, you should learn how to deal with. It's a temperament to deal with.
Right.
Risk is something you can't avoid using permanent capital. So try and avoid that by all means.
Sure. On that note, thank you so much, Ramesh. It's always such a pleasure talking to you.
Thank you, Mahalakshmi. It's always great to see you in flame. And I think I would urge your viewers interested in investing to come and join this Flame Investment Lab courses. I think there's an extraordinary collection of individuals here.
Absolutely. Thank you so much, Ramesh.
My pleasure.